Hi guys, welcome back to another podcast by mykayaplus. Today we will be talking about a company that used to be a stock darling of the Malaysia Stock Exchange back then when it started to IPO. Fast forward to today, I think it has been making the headlines again because share price of Farm Fresh has been tanking, and I think we have also covered extensively on Farm Fresh from a YouTube perspective and also from an article perspective. Do check them out because I think we covered a little bit more in terms of the technical aspects, even down to the kinds of breeds that Farm Fresh has been using to, produce milk and to, grow its business. But back then until today, what has changed for Farm Fresh in terms of anything that made the share price tank so much? Tremaine.
Yep, I think before we talk about, what actually happened, probably you guys already know because it has been hitting the headline. I would say the product itself didn't change much. The feeling of the end user, not the investor or the shareholders, it didn't change much. It's still basically occupying multiple tray in the shopping malls. It's still one of the favorite brands. It's still very close to me as an end consumer. I like the products. Although I'm not a frequent user, but then I like the products. I brought my families to their farm in UPN. Everything was pleasant. The feeling is like a homegrown brand with relatively affordable pricing. All these things didn't change. But what actually happened uh, when we look into the latest performance, I think this one basically explain the, the whole thing. If you look into the latest quarter, quarter four FY23, and then you do a year on year comparison, it's a shocking figures because even though revenue actually pick up, it actually increased by 36%. But if you zoom into the profit related figures, is basically dropped by 72%. It's a 72%. But if maybe you only consider this is the quarterly effect. If you zoom into the entire financial year of 2023, the profit before tax still dropped about 21%. So it's still quite a big number. And then I would say it's already reflective and being shown in the share price performance. So this is the summary of it. Not a good performance, but what happened behind the scene is, of course, if you zoom into their P&L, this is the one that we basically comparing it against, the previous financial year versus the current year. There are a couple of things to take notes. I think the key thing to zoom into it, of course, is the distribution expenses become higher.
Yep.
Of course, some will actually put in the pointer that their other income actually reduced, but I wouldn't say that it's significant. It's always one off. It's never
Yep.
their core contributor. So the key one is related to your distribution expenses, which is your transportation and logistic, and your advertisement and promotion. So all these things is basically costing them more. But I would say this is still from the surface level. There are a couple of things to take note. Maybe Jupan, you can basically cover it from a balance sheet perspective. I think this one got more insights.
Yeah, I think whether you like it or not, the fact that the business that Farm Fresh is operating in, even though a lot of analysts or even a lot of gurus out there say that they are in the end-to-end farm to cup, farm to glass business model, which is they own the cow herds, right? They harvest the raw milk and then they produce and process it into their products and then distribute it. It still um doesn't beat the fact that the upstream portion of it, the milk supply part, is very commoditized. Meaning to say that dairy is actually a kind of commodity, and any unfavorable swings in terms of the commodity price, if the company cannot pass on the cost to the end consumer, then there is where you see the negative effects in terms of the margin compression, right? So what we can see here in the latest balance sheet is that a few key points, which also tie in back to the recent news headlines that actually hit Farm Fresh. So the first thing first is the inventory levels have actually gone up on a year-to-year basis. So it's a 46.1% change in terms of increment of inventories. And if you zoom down on justifications, they are saying that primarily due to higher proportion of ingredients kept as a buffer and also higher levels of finished goods to cope with increased demand. So here's the thing that I think is a little bit contradicting. So if demand is high and that actually push up the distribution expense that we saw just now, then supposedly revenue should grow at a higher pace, right? Your higher revenue should cover for the higher distribution, but net profitability increase because you are operating at a much efficient scale. So the very fact that even though gross profit increased, but distribution expenses increase at a faster rate, and that means that it's not so efficient for this particular financial year, and that means that Farm Fresh has to actually keep a higher proportion of their capital in terms of inventories, and also to offset the potential shortage of milk and dairy ingredients. So that is what has actually pushed up the inventory levels. And the other one that is actually much more concerning would be the current liabilities part, the loans and borrowings. So that portion has gone up by 97.7%. So cited by them is because it's the increased utilization of trade financing, also revolving credit for working capital. So this will tie back to the second point that we mentioned, which is the increased inventory levels. So if you want to, cater, offset any potential operating inefficiencies, you have to keep higher inventory levels. That means that the amount of money you put in to your stock to keep is also higher. And if you don't have any, enough sufficient cash on hand, a portion of it will be financed by credit, loans, and borrowing. So these two has gone up in tandem, and the case actually support each other. And the other fact is that other small, not so concerning, items picked up on a comparison is actually the cash and cash equivalents. Of course, that portion has dropped down. That's why they need a higher cash coming from loans and borrowings, and also in terms of the drop in other investments, which actually, I would say more towards other side business, which is also particularly the food chain business as well, that is also contributing from that aspect as well. So if you compare and actually put the two income statements and also the balance sheet statements together and have a view, it is actually telling you that there's a little bit of operating inefficiencies. Costs are actually bloated for Farm Fresh in this current financial year, and that has actually put down the entire profitability of the business for this year.
Yep. So I think what lies ahead, beside, I wouldn't say this is a one quarter effect. It's going to be continued, because you talk about distribution costs. You got to tie back to the macro side of the things. But then the thing is still going on. I would say they still have a couple of plans in terms of products they are going after. They also have a few more strong collaboration. So you can see something that's coming very soon is they will have a couple of new product launch. I think the Yara by Farm Fresh full cream milks is also quite a significant one. Probably they will have some strategic partnership with public school or private school as a school meal. So all these things will come in. Things still quite positive from a product distribution standpoint. And then of course, on top of it, they also have some, I would say, strategic partnership with Jia Grocer. Basically, you can buy more bottles of Farm Fresh, and then you can fill up the fresh milk from tap. So there's another concept actually offered by them, fresh from tap, and then you can actually take it home. So all these things is still active, still legit. And then if you notice right now, there's another char time or char time equivalent kind of things is into the market called Jum Cha. So if you like bubble teas, this is another option. I did try, it's quite good due to the fact that it's basically using fresh milk produced by Farm Fresh. All these things still going strong. Is an interesting space to watch. So other than that, everything is all good. From the company perspective, you look into a single company like Farm Fresh, but there are a lot of challenging parts that
Yep.
we have yet to cover. I think Japan, you can
Yep.
cover it. It's because they may not the only choice if you talk about homegrown fresh milk brands. So there's a couple of things being launched by the other guys.
Yeah, so I think you talk about 20 years ago, um, it is almost impossible or nonsensical to have dairy farms in Southeast Asia or even in Asia, uh, particularly countries within the so-called tropical belt of the part of the world we are living in, just because of the fact that um, efficient milk producing cows cannot tolerate the hot and humid weather right here. So this is why for the past many few years, we have been importing milk, liquid milk, fresh milk from other parts of the world. So think back 20 years before where we are today. We have been a country together with our neighboring countries, and we have been a very strong milk powder consuming countries because it's almost impossible to bring fresh milk from other parts of the world, say for example Europe or even Australia, Oceania, to to Southeast Asia and enjoy quality fresh milk. So we had to resort to milk powder. But as spending power improve, logistic also improve. That's why you see the possibility of importing milk in terms of liquid form, and then it can be straight from exporting countries like Europe and even Oceania to Malaysia, Singapore, and also Thailand as well. But I think the recent initiatives is that it's also possible, but you just need to choose a specific breed of cow that is suitable to produce milk even in the hot and humid climate and weather in Southeast Asia. But that also means that other people can go and procure these cows and set up their own dairy farm. So back then, when Farm Fresh IPO or started their business, their selling point was that we are the homegrown farm to glass company that offers you quality dairy products. But as of today, you have old timer F&N also pitching to doing the same. So they are going to set up their own dairy farm in Gemas, Negeri Sembilan. And not to also forget, there's also an existing player, just that in terms of marketing, strength and prowess is not as strong as Farm Fresh, but they are already in the market. I think some of you guys are also strong supporters of this brand. So this is actually a dairy initiative by Felda. So it is also tied back to the Malaysian government, right, in some ways. And they have also a strong suite of dairy products, and it's also proudly farm to glass kind of selling point. So it's not now a unique selling point to Farm Fresh. So you can see that that's why Farm Fresh has been more focusing in terms of what can we do more than the current suite of products, which is just take from shelf. So they have Jom Cha, they have also acquire inside scope, right? So it's diversifying in terms of the end stream. But don't forget, it's still a dairy business. The upstream volatility swing in terms of the commodity price, the input cost, your raw materials will still continue to be affected by the dairy prices up and down. And if Farm Fresh cannot pass on these increased raw material costs to the consumers, that's where you can see what is happening right now, which decrease in terms of the margin compression happens, and then the net profit will also increase. So due to the fact that they are still not that strong upstream, which is why as a total company as an own, it has never been my favorite company to invest, even consider factor in the high PE ratio and the high valuation. It's just like not on my current, risk tolerance as of now. But what do you think, Jermaine?
Yeah, but I think if you don't have exposure to the international stocks, probably this is very close to you, and then you can relate to it. That's why there's a lot of, we call it as a popular stocks back then. But just to add on the point that actually shared by Japan, talking about the new farm being set up by the other companies, the fact is the type of cow that actually being brought into this part of the world is not that efficient. So like it or not, it's not like to like or apple to apple. You bring and if a cow that can produce, let's say, 10 bottles per day, come here, probably you can only get 3 to 4, for example. So it's totally not the same scale. So it's still not efficient, but then you countered it with the effect that you can get it fresh in your homeland.
Yeah.
So this is the only difference. But other than that, to put things into perspective, to be fair, Farm Fresh isn't that bad if you talk about performance. If you compare the recent 6 month share price performance against one of the closest competitor, which is Touch Lady, they basically about the same in a way. And one good thing is basically Farm Fresh PE got slashed down in a slightly more reasonable number. Now it's 30 plus, close to 40, and quite close to Dutch Lady. I think Dutch Lady is about 30 to 35. So this is not only happening to Farm Fresh. It's just Farm Fresh used to have so many expansion, put in so many strategic partnership that caught your attention, bought your inside scope, and then launch Jomchai and so on. But the macro is actually bad. There are even news talking about Dutch really plan to prioritize. I'm not sure how is it, but all this factor is the thing that you should consider before you invest into it, whether they have any advantage from the upstream perspective, downstream, in terms of distribution, how well they actually planned out with the different channels. One thing that actually coming quite soon is there will be a revised in terms of pricing, but I'm not sure to what extent, but it's coming soon. Probably will help, but whether can help to basically cover the loss in profit. I mean, if you talk about the latest quarter performance in a year-to-year perspective, probably still quite far away. But this is a few facts you should know before consider investing into it, and try to basically get it from a so-called historical low price. What are your final thoughts or things you wanted to share with our audience before we end the video?
Yeah, I think it's easy to just focus on the bright side and good side of things whenever a popular company and brand like Farm Fresh actually IPO. I don't discount the fact that share price has actually gone up quite a bit since they IPO, or even if you manage to get the IPO. But back then, if you are someone that lucky and you actually manage to ride the wave, and if your game plan is actually just to profit from the popularity of the stock and you sold it at a high price, then congratulations. I think the scary part is that you utilize a value growth kind of perspective. I want to hold this stock for the next 10, 20 years because I believe the company is that kind of company that fits into this kind of criteria. And you never have industry knowledge, deep dive knowledge of the entire dairy business perspective. So thankfully for myself, I have the opportunity to have been, active and have a little bit of knowledge on the dairy industry to say that this is not something a company like Farm Fresh can handle in terms of the upstream volatility part, which is the commodity price swings, right? It is good that they have a farm. They still have some control over there. But the very fact that if you're competing globally with other large dairy companies will have much more high yielding cow breeds in terms of the milk quality output. So definitely you're already losing on that front. The only thing that you are, competing and being efficient is the fact that everything is local, like your imported milk needs to be shipped in reefer containers, so that portion of cost you actually offset it with your lower yield cows. But when milk prices continue to go up in tandem, you might find yourself into a sticky situation, which is what Farm Fresh is right now. Your operating efficiency drop, your costs actually increase at a much faster rate. And then if you still sell more expensive than imported milks, then what are you going to actually pitch and market as a selling point to your customers? So food for thought for that point of view as of right now, which is actually hurting Farm Fresh quite badly. So of course, if you find this video insightful, useful, share it with your friends and families. Don't forget to give it a thumbs up, and also subscribe and turn off the bell notification button so that you get the latest video updates and video launches from us as well. And if you have any topics that you want to cover, do let us know in the comment section. Anything you want to add on to that, Jumbing?
No, I will still go for their products. I mean, it's still quite a good one. It's just whether from a investing point of view, whether it makes sense or not is another story. I think that's for me. Thank you
Thank
for
you.
listening through, and then
Yep.
see you guys in the next video. Bye
Right.
bye.
Take care. Bye bye.